Hello, everybody. I'm Marketing Manager Sherry Branson. I'd like to welcome you to the top post-COVID crime insurance concerns impacting community associations webinar. Happy first week of spring. This is the first week of spring, so I hope everybody's enjoying their first week. And I did want to take a second just to mention, if you'd like a copy of today's PowerPoint that we are showing you today, please send me an email to sherry.branson@amwins.com. I'm happy to send you a copy of this. And if you have any questions after the webinar, feel free to email me as well. I put all of the recordings of the webinars on our website, which is kdisonline.com. So feel free to listen to the webinars at any point on our website as well. And we're going to do a short Q&A at the end of today's session. So if you have any questions, please type them into the questions box, and we're happy to answer your questions. We have a very special guest today. We have Ted Lansdale from Travelers, Senior Counsel from Travelers. Welcome, Ted.
Thank you. It's great to be here.
And Kevin Davis, the president of Kevin Davis. Hi, Kevin.
Oh, good. Good to be back.
Kevin joins us from California. That's drying out a little bit after all the rain.
Yes. Today, finally.
Finally. A little bit of sun. That's great. That's great. Just in time for spring flowers, since it's the first week of spring. And Kevin, today we have a very interesting topic. We're going to talk about crime claims and post-COVID and, how things have changed over the past 3 years in the community association industry and, what Ted is seeing and basically an update for everybody. We haven't talked to Ted in a few years. I know it's been like 4 or 5 years, I think.
Yeah,
so.
It's been a while. A lot has changed.
Absolutely.
Yes, you know what? It's going to be interesting because, and we've done this before. What does the world look like after COVID? What have we seen? And so we got a hold of Ted, and who's Ted has been doing. Why don't you say a little about yourself, Ted?
Yeah, sure. One, I'm excited to be back. I think the last time I was here, like Sherry said, I did 2018, 2019. So it's kind of nice, always be back, friend of the pod sort of thing. So I am senior claim counsel here at Travelers. I've been doing insurance claims for 13 years. Before that, I was an attorney. Where in Boston, where I would do professional liability work. So defending professionals like lawyers, accountants, realtors, things like that, who were accused of some sort of malpractice. And then more recently, probably in the past 5 years, I've been really focused on what we would call fidelity losses. Those are employee theft losses, handling it under the general crime policy. And kind of immediately before that at Travelers, I was a former manager of the cyber claim team, where I handled cyber claims for a bunch of years, everything from just social engineering to ransomware, all sorts of fun stuff. Yeah, looking forward to it. It's great to be back.
Oh, it's great to be back. And I tell you, the things you didn't mention are what we're going to talk about today. But we're going to talk about, because we know that COVID has changed the way we look at everything. There's all kind of differences. And what we've done is said, I went to Ted and said, okay, what are the top 5 areas? And we talked about, employee dishonesty, social engineering, and he gave us a list of what we're talking about. And so we talked about post-COVID crime concerns. Again, we're meeting that right now. COVID is officially or almost officially over. But guess what? I'm working from my home. Sherry's working from our home. I'm looking at my outside today, and I'm locked into my computer. And I think the world's changed. And because the world has changed, we're seeing unique, different types of crime claims that we've seen historically. So employee dishonesty still leads the charge. Then you talk about number 2, is forgery, preposterous forgery and alteration claim are number 2. It leaked up. I mean, historically, we never seen it before. Now it's number 2. Number 3, social engineering, funds transfer fraud, and computer crime. So we'll take each one of these, talk about it, talk about the trends, what's going on. And by the time you get done, we'll all learn about what is this new normal when it comes to crime losses. So let's jump in. Let's get started on this employee dishonesty. So now, when we talk about employee dishonesty, what we really talk about is something is unique to community associations. It's unique to community associations because most associations don't have employees. They have non-compensated board members, which we cover, but it also we extend coverage to the property manager, community association manager. And I think right now, when you talk about employee dishonesty claims, Ted, the property manager has to be where we're seeing most of the claims.
Yeah, that's right. Absolutely. property managers are the ones who are kind of doing most of the stuff, like, right? They are the day-to-day operations of the community association. So that's really, they've got the ones with the most opportunity and the most access to the funds. So even though you've got a board who's overseeing and looking at these funds, they're probably not going to be that involved on a day-to-day basis, right? They might be given some direction to the property manager, but really it's the property manager, he or she's got the access to these funds, bank accounts, or even just they could order a bunch of stuff. You know, that's a common claim that we'll often see. If it's not someone who's stealing directly from the association's bank account, right? Maybe it's they're ordering a bunch of things. You know, I've seen claims where, you know, this association's got, you know, one tiny little pool, but for some reason they've ordered the equivalent of 1 mile of fencing, which makes no sense, right? Like, why this pool's like 30 feet wide at its best. So there, obviously, you know, this property manager may have come up with like a scam. This is common, right? They come up with a fake vendor and they just kind of submit these invoices, hope they get approved and no one looks, and it turns out that vendor, it's really them. So employee
It's interesting.
dishonesty is something that's always around.
Yeah, one claim I remember seeing years ago where a property manager is ordered a box of light bulbs, and he charged every association for that box of light bulbs. He may have changed one light bulb in there, and so these kind of things you're talking about, excuse me, in terms of now, have you actually seen board members commit kind of employee dishonesty claims?
We don't see, fortunately, we don't see a lot of board members committing committing fidelity claims, right, where they're stealing from the HOA. But you know, it has happened in the past. Again, if someone has an ability, really, you're looking for a few things, right, for these employee dishonesty claims as to how they happen, right? It's access to the money. There's going to be some sort of trust, and maybe someone's not watching as closely as they should, or maybe they're just not watching, right, because you trust this person. So usually it's the property manager who's in there day in, day out. They're probably most likely going to be involved, but board members, right? These are fellow residents. These are people that you trust, you see all the time, maybe know their kids. So there's probably less scrutiny there than there ordinarily would be. So yeah, it's certainly possible that you could get a board member to steal. We just don't see a lot of it, fortunately.
Okay. Now, do you have any exclusions that get in the way as far as a property manager or an employee in terms of our handling these cases? Have you ever handled a situation where you had to come back and say, listen, guys, there's no coverage before you did X, or you're in violation of one of the exclusions?
Sure. So with the exclusion, some things that you want to be careful of, you know, things like indirect loss, like that's always going to come up. And Kevin, I'm glad you brought this up. You know, this is a first party policy, right? So we cover, generally speaking, and again, I should say this policy is, you know, 20 or 30 pages for a reason, right? So I'm just speaking generally. But some common times where we'd say, you know, I get it, but there's probably no coverage, is if there's an indirect loss, meaning, hey, the property manager did something, maybe, and they caused someone else a loss. I don't know, maybe they crashed into someone or they stole from someone else, not the community association. But now this person is making a claim against the community association saying, hey, your property manager did this to me. I want you to pay up. That's kind of a common example where we'd say, well, wait a minute, there's might not be coverage under a first party policy because that loss, they had to steal from you, right? We insure the community association. So that's where we see it. If we do.
Would that be an example where the property manager may go into an individual's unit and walk in their unit and take the jewelry or take money off their spine? Is that something like that would be an indirect loss?
That's a great example. Yeah, that might be an example of indirect loss where I'd say, well, you didn't own it. You weren't holding it for other people. So this isn't a loss really felt by the community association. And you kind of ask that, like, who felt this loss first? In that case, that's the resident. Now, the crime policy does have certain coverages that, you know, you potentially could purchase to cover that very scenario. But as a starting point, you know, the traditional employee theft coverage wouldn't step in there. We'd probably look at that more as a liability claim.
Interesting. Okay.
Yeah, but, you know, just to back up a little bit, the employee theft coverage is still very broad. It's probably some of the broadest coverage there, in that is so long as an employee is involved, right? There's probably going to be coverage, or there could be coverage. And it's one of the few instances where we say, okay, where we look at who's doing the loss. The rest of the policy will say, well, we're not paying attention to who actually did it. We're saying, what did they actually do, right? Did they break in? Did they forge a check? So the employee theft coverage is a little different.
All right, good. All right, I tell you, let's move on to the forgery and alteration. Let's go to the next one, forgery and alteration. When you talk about forgery, we're talking about a lawsuit staying through the alteration of a negotiable document. So let's talk about that. How did that become number two, where we never had deposit
We
forgery
never
money
did.
before?
Yeah. So Kevin, when I started doing fidelity claims back in 2015, I'd see a forgery claim, I don't know, maybe one or two a quarter, maybe one or two a year. Never saw them. Then post-COVID, these things have exploded, right? Just go to Google and just search for any news story about a local postal carrier being robbed of their keys, right? So this is what's causing it. But before I go down that tangent, check this forgery or alteration coverage. What it's covering is if someone forges, not necessarily an employee, but just someone forges a check drawn on the community association's bank account, right? So the community association writes a check to, I don't know, their oil company, gas company, puts it in the mail. Turns out fraudster gets it, changes the amount payable and who it's payable to, and they put it in their own account. And maybe this isn't caught for a few weeks. That's kind of a common scenario where we'd see it. We never saw these. And at this point, I'm probably getting probably at least one or two a week now. And it's pretty rampant. It's gotten to the point where recently the federal government, this FinCEN is the agency, they just released a big bulletin on how to combat this. So it's gotten the attention of the feds. Carriers are clued into it. Banks are now clued into it. And how I think it's happening is it looks like a lot of these checks are being pulled out of the mail. So like I said, postal carriers being robbed of these keys, these universal keys that bad guys could use to get into those postal boxes, go through the mail and pull out the checks. And then once they got your check, they could do any number of things with it.
Wow, that's wow. And now, are we seeing it in our community association also? I mean, checks from community association and property managers is happening.
Yeah, we are. I mean, no one would be immune to this, right? So if you're an institution that's writing checks right now, you've got some risk there. Whether you're a property manager, you're a Fortune 500 company, or just a small little mom and pop store, if you're writing checks, you've got this exposure. There are certainly a few things that you could do.
Okay.
One things I'd recommend is, certainly pay attention to your bank statement. I mean, it sounds so foolish, right? And so easy, but pay attention to this stuff, because your bank, if you take 6 months, and I've seen this, if you take 6 months to discover that someone's forged one of your checks, and then you tell your bank might say, well, I'm very sorry, but our account agreement says that you have to let us know within a certain time frame, 30 days, 60 days. And if you don't, we're not going to be able to do anything for you. So that's a basic way to kind of combat this stuff. Check those bank statements. And then also, if you're a larger community association, I'd consider getting something called positive pay. This is where you tell your bank, hey, here are the checks that we're issuing. Expect them to come in the collection process. And if they match up, right? Check number 1 payable to John Smith for $100. If that check comes in, the bank will release it, or sometimes they actually will present the items that have been shown to them for collection, and then you have to go manually approve them. So there are some things that you could certainly be doing to stop this.
Wow. So, okay, so right now what we're seeing more than ever before is, now do we see actually people creating false checks, or these are actual real checks that they are forging real checks? Do you like
both?
Those also?
Yeah, so we're going to be seeing both, actually. Sometimes these checks are just made out of whole cloth, right? So think about all the checks that you have that are kind of floating out there. You pay the cable company or wherever. All someone had to do was just get an image of that one check. Now they got your routing number and the account number on the bottom, and they could just call up. I could pretend to be you, Kevin, to Deluxe and order some checks. I'm not advocating anyone does this. This is probably a federal crime, but I could order checks and now they'll look perfectly legitimate. And, and then I could just start writing checks, and I'd hope that you're not checking your bank statement enough and this stuff will just start going through. And then other times I've seen it where the actual check is intercepted, and either it's what they call washed, where they, take out the payee line and the amount, and then they just change it to something else and they put it in their account. And these schemes, they could be, pretty small, like just a one-off small check. Sometimes the fraudsters will start small and then they'll just kind of keep going and going and going. We've seen it, not with any community associations, but we've certainly seen it where these schemes have gone on for weeks, if not months, where someone was just not looking at their bank statement. So remember, open those statements. I know it's a hassle, but it's, I remember your parents probably did it. Listen to them. It's always good advice. Look at those statements.
I think one thing we should say, though, is that this is for non-employees stealing this. If this was a forgery by an employee, that would
That's
be
right.
employee dishonesty. So
Yep.
basically separate the two of those.
That's right. Absolutely. Yes.
So yeah, because if this is the positive forgery for somebody else getting access to it. I'm glad you mentioned about the key, the postal key, because they do have these universal things. They open up all the mailboxes.
Right.
If you have access to them, they start taking things out of there. And I think from my point of view, I have to stop writing checks. I don't write that many checks at all. But yeah, I gotta kind of just use online banking. I think.
Oh, yeah, right. Use online banking, keep those passwords secure. We'll talk about that in a bit. But yeah, I think there's a lot of people doing that.
All right, so let's go into social engineering. Social engineering is by far right now is what we've been talking about for the past 3 or 4 years. And this is the nightmare. This is the nightmare scenario because you're talking about paying and delivering funds committed by a person pretending to be an employee, a vendor, a client, whoever. They're pretending. They're tricking you into giving you something. Historically, that wasn't covered. And then we started going, let's talk about social engineering fraud.
Yeah, so this is right up there. We call this the big three, right? We got employee theft, forgery or alteration, social engineering frauds. These are probably the most frequently triggered insuring agreements. Social engineering is, you work at someone pretends to be a vendor or someone pretends to be an employee and says, hey, I've updated my direct deposit, or, please note, we've changed our banking. We've now moved to a new bank. You think it's legitimate. It looks like it's actually coming from your vendor. Let's say you're trying to pay, I don't know, the pool cleaning company, and they tell you, oh, we've switched banks. We're not at, bank X. We're now at bank Y. You believe it. You change your payment instructions and then you send it out. And then here's what happens. You could imagine 3-4 weeks later, you get a call from that vendor from the pool company saying, hey, is there a problem with the bill or service? We noticed we haven't been paid yet. And then you say, well, what are you talking about? I've paid you here. Remember, this is an email that you sent me. And invariably they will say, well, that wasn't me. That was someone else. You've paid the wrong person. So those are common sorts of scenarios that we have. Social engineering coverage, certainly it is available under the crime policy. Most crime policies will offer it. And it's frequent. It's not really showing a whole lot of signs of slowing down. In terms of what you could do to stop it, I'd really recommend just a few things, right? If before you pay, you change any payment instructions, get into the habit of just asking yourself, does this make sense? Right? Because there's a lot of times where we do a postmortem and we talk with folks and they say, man, something felt a little off. But this pool company's been great and we didn't want to slow down the payment, so we just issued the check. But just slow down and say, hey, does it make sense that this that this vendor in California suddenly has a bank out in Massachusetts? And then the other thing is pick up the phone, right? Just if you get a payment instruction that's changed, pick up the phone and make sure, here's a big pointer for you guys. Make sure you call a number that you've had, right? Because a lot of times the fraudster, when they're impersonating that pool company, on the bottom of the email, they'll have a nice signature block with their phone number, right? And you probably never called them before. So you just look right at that email and you call that phone number. Well, you've just connected yourself to the fraudster, who of course is going to say, Oh, absolutely. Pay me double if you'd like. So those are the two biggies. Just stop and think, and then call these folks using a number that you know is good. Get it off a public website, or hopefully you've had it jotted down on an old bill or something. But if you do those two things, you could really save yourself a lot of headache.
Now, here's a question I get all the time. What's the difference between funds transfer and social engineering? Because they both pay and delivering funds committed by
Yeah.
a person. What's the difference? Because
Yeah, Kevin. Yep. I love that question. I love it because now this is where I kind of do like my public service announcement thing, because I think it's good to educate what the difference is, right? So social engineering is just what I talked about. Someone pretends to be like a vendor and you are fooled, right? Oh, I think this is actually the vendor and I send money to the wrong person. That's social engineering. Funds transfer fraud, right? This is coverage that is predated social engineering, by many, many years. Funds transfer fraud is a little different from social engineering. That's where a fraudster pretends to be you to your bank and fools your bank into transferring money. These claims are a little rare. You don't see them that much simply because banks have a lot of security procedures, right? They're naturally on guard for fraud. So we don't see a lot. However, it does happen, So again, funds transfer fraud, someone pretends to be you and misleads your bank. And one of the key distinguishing factors between these two is with funds transfer fraud, you are usually completely unaware that any of this stuff has happened until you look at your bank statement and you say, this money went to where? As opposed to social engineering, you are a participant, an unwitting participant at that, but you are involved in it. So those are the two differences there.
Now, one more thing is that before there was social engineering fraud coverage, it was always denied. These claims were denied. And why were they denied?
Right. So when social engineering was presented under the funds transfer fraud coverage, oftentimes there would be coverage issues there because what has happened is no one impersonated you to your bank, right? You told your bank to send money off to the wrong person. There was no impersonation there. It was actually you, but you were doing this laboring under a mistaken belief. And so those are the differences between the two coverages. And oftentimes, while they would raise some coverage issues under the form.
That's why, this is the important part, because the biggest problem I see out there is that social engineering, people automatically, because again, nobody heard the word social engineering 2 or 3 years ago. And still, people still don't understand it. We all been victimized by it one way or another. I get emails every day, I get emails and text messages that my Netflix has been denied and my American, everything, no matter what it is, UPS is late, click here and do it. And so we've all been constantly been tricked into giving out information so they can steal. So that's the big social, that's new.
Right.
So now all of a sudden, that seems to be the number one area because it seems to be easier to trick somebody into giving the information than actually on a funds transfer part of it. And I'm glad you mentioned that because the next one is funds transfer coverage. And funds transfer coverage that's the tricky one for me because, and I think you did a good job of really explaining funds transfer coverage because the whole idea of funds transfer is tricking the bank. You have a person in there who's trying to trick the bank into giving them releasing the funds.
That's right. Someone's misleading the bank. And I think fraudsters have realized, well, where's the weak link in that chain? It's probably the end user, the customer, right? I could fool them, you, all of us, easier than I could fool your bank. To talk about the prevention, what's nice about these claims is they're serious, right? There is potentially coverage for them. But when I say why they're nice is that they are easily preventable. Unlike employee theft, to some extent, it could be stopped. But if you have an employee or your property manager, you have to trust them to some extent, right? That's why you hired them. So it is difficult to really be on guard and mitigate all types of employee theft. Funds transfer fraud, any sort of these electronic crimes, they are easily stopped most of the time, now listen, we're all going to get fooled from time to time, but most of the time, if you approach every time someone's asking you to send money, this might sound a little unreasonable, but it's not actually, if you think about it. Just always think, is this really who I think it is? Because remember, in this post-COVID world, a lot of this stuff, we've gotten very comfortable with everything being electronic. Conversations that used to be, face-to-face are now touchless. They're all electronic. I mean, I just heard an ad on the radio yesterday for, if you don't want to deal with the hassle of dealing with people to fill your gas, propane tank for your gas grill, now there's a service, well, let's just drop this thing off. And they were touting it as it was, you don't have to talk to anyone. So now I don't even know who the vendor is. Everything's electronic. If that's the world that we're all in, just think, there's a good chance, just ask yourself, hey, is this person on the other end of this electronic message, are they really who they say they are? If you kind of have that mindset, you'd probably be able to stop a lot of these losses.
Now, on the funds transfer, so I'm the bad guy. I'm trying to trick the bank into giving me. In order for them to do that, I need information from the person I'm trying to get the money from, right?
That's right. Yeah, you're gonna have to know something about the account holder.
Okay.
And how they could do that is sometimes, some banks, not many, well, they will rely on email instructions. Let's say you're a large community association, you've got a relationship with your local bank, and you freely email your your relationship person, whoever your contact is at the bank. You set up this course of dealing where you just email him or her to send out money. Well, sometimes if a fraudster could hop in that conversation or somehow pretend to be you, there's potential there where they could mislead your bank. Now, again, almost every sort of bank is going to take those steps that I just advocated for. They're going to send you that SMS code on your phone, or they're going to pick up the phone and actually just call you to make sure it's you. But it's possible. So thankfully, funds transfer fraud coverage it's infrequently triggered. Not that there's not a risk out there. I'm sure it's happening. It's fortunately our banks are keyed into this, so they know how to stop it. But it does.
I'm glad you said that, because again, historically, we all talk about funds transfer coverage. You got to have, it's most important coverage out there. But right now, banks on top of it, even if they do, something happens, they'll come in and reimburse the association anyway. Most times, I assume that's correct, right?
Right.
As long as
Yes.
they get that time.
That's right. Yep.
All right, great. All right, got one more left. That's computer fraud coverage. So you got computer fraud, funds transfer. Let's talk about computer fraud. What's the difference between computer fraud and funds transfer?
Yeah, so computer fraud is someone's going to have to get into your network, again, without any of your help. And then from there, they're going to have to, cause money to be transferred from your account somehow. So a little different. So here's a potential hypo. And again, this is just a hypothetical. Remember, this policy is, it is as long as it is for a reason. But let's just go with this. Let's say they get into your network and then they mislead, instead of misleading your bank, they use your computer network to mislead your payroll company or something like that. Maybe, community associations, maybe you got a few property managers working for you. And suddenly now the payroll company, who's not a bank, but somehow they're involved in the flow of money, they mislead them and they send it, and then money is sent out to different places. So that's potentially an example of computer fraud. Here's something that's important to remember. So of the 5 that we talked about, the first 3, employee theft, forgery, alteration, Kevin, what was the third one? Social engineering. That's right. Those are the big 3, right? 4 and 5 are very small relative to those 3. Funds transfer fraud, it'll happen. Computer fraud is fairly rare, simply because whoever they're going to be interacting with will usually have a lot of safeguards in place. Not to say it wouldn't happen, but that's where whenever a computer is involved and there's a loss, more often than not, it's going to be that social engineering fraud coverage, right? Where you yourself are misled. That's just kind of the nature of these things. So those big 3 are the biggest: computer crime and computer fraud. It's out there. It's a coverage that everyone can feel good about. But fortunately for us, it's not and I think most carriers would say it's not a big driver of losses.
Well, I tell you, this has been great. And I'm glad we went over these things because, first of all, most of us don't understand depositors forgery is now leaped up there from historical. Nobody even cared about depositors forgery. And we always talk about, computer theft and funds transfer fraud. And you're right, the controls they have are so tight now. That's why social engineering has leaped up there, because it's the easiest way for somebody to steal money from somebody else. I mean, you're just giving it away. You just try to trick somebody into, it's easier to trick somebody into something than it is to have them download something or click on a virus and those kind of things. So it's good. I think that's good. Very, very good.
Good.
So, all right. Thanks a lot. I think we have questions now, right?
All right.
I think we had question time. Sherry, will you come back and let us know? Oh, we got some tips preventing theft. I think we went over a lot of the tips already. You want to throw any more out there, Ted, that you may have missed?
No, I mean, it's just, you got to trust but verify, right? You got to assume that these folks, you need to trust them so they can get the job done, right? You're not constantly in their way, but at the same time, you need to verify, like you would anyone, that they're actually doing what they should be doing. So trust but verify.
Okay. All right. Thanks a lot. So,
Fine.
Sherry, what do you think? Any questions out there?
Yeah, we did actually get a question. Fernando had sent in a question, Kevin. Thank you, Fernando, that an agent had. And it's regarding keystroke logging. And I had to look up the definition of keystroke logging. I was not familiar with it. It's basically where somebody is capturing the action of somebody typing on a keyboard, and it's done covertly, so that they can see what they're typing, I guess, and get passwords, that kind of a thing. And so the question that the agent had was, is keystroke logging covered? Keystroke logging theft covered?
I could jump in if you'd like, Kevin, on
Sure,
that.
go ahead.
Sure. So there is, there's no particular coverage for keystroke logging. So at that point, I'd be asking, the first question I'd ask is, well, who did it, right? Was it an employee who did it? So if it's an employee is involved, well, then potentially there's some coverage there. There's a potential avenue you could go down, right? Because employee theft coverage, we just cover the person, regardless of how they steal from you, but that's who we cover. If it's not one of the if it's not an employee, then we start looking at kind of those enumerated types of theft or losses that are done. Is it forgery? Probably not. Maybe it's funds transfer fraud. Maybe they use that keystroke logger to take over your username and your password, and then they've used that to access your bank account. Maybe, again, coverage, the devil's going to be in the details there, but potentially there could be coverage for that loss. It's all going to depend on what are the details and the facts and circumstances of that particular loss. But I'd say if I were the claim handler getting that claim for the first time, those are the questions I'd be asking.
Excellent. Thank you, Ted.
Mm-hmm.
Thank you, Ted. We have a couple of other questions that have come in. Somebody asked, we had a property manager that had control of an association's bank account to pay the bills and had a social engineering situation that was denied because the funds were not the property manager's. How could that be covered? Thank you.
Wow. Okay.
Yeah. So, go ahead. You're going to take this one? Yeah, I could take it.
Okay. All right. So basically is that the property manager, if he's additional insured under the policy, he has to be additional insured for employee dishonesty and social engineering also. If he's not an employee on social engineering, then there probably wouldn't be coverage. Don't you agree with that, Ted?
Yeah, I mean, right. What I'd be also looking at is, again, that concept that I talked about, Kevin, when you asked me, are there any sort of exclusions that come up? And I talk about that indirect loss.
Mm-hmm.
So this, not to use too much jargon, but when we think of this as a first party product, that kind of puts a little fence around, hey, this is the stuff we cover. And that stuff is going to be the named insured's stuff, money, property, securities. If it's not the insured's money, property, or securities, so it sounds like in this case, you had one entity over here who wasn't insured, was playing with non-insured money, or vice versa. So that's probably why that situation arose.
Wow. Okay. Yeah. So the key thing is that he has to be insured under the social engineering coverage along with the employee dishonesty coverage. If he's not, then if that probably, again, it becomes an indirect loss by a third party. So all of a sudden, the association is saying, wait a minute, you handle our funds. I could be not insured under a policy, but you're not. Then when the claim comes in, it's just he's not insured. It's an indirect loss of money and securities and other property. That's a good one. Okay.
Yeah, that's a toughie.
Yeah.
Mhm.
Yeah.
Absolutely. Great. We have one more question. We have from AJ. Thank you, AJ Scott. Regarding forgery and alteration, we talked about the frequency of these claims, and forgive me if you addressed this already, I missed it, but can you speak to the typical scale of these claims compared with other insuring agreements? Do they tend to be smaller amounts? Would you recommend maintaining the same limit for this agreement as for employee theft?
Sure. I'll leave the limits question, maybe to you, Kevin, but I could kind of talk at least about the scale of what I'm seeing. It really varies. We've seen some very small claims, a few $1,000s, to some very large checks, 6-figure checks. And if the fraudsters are usually going to attack a commercial entity because they're keeping far more money in their bank accounts. They've got to make payroll, right? They've got to pay vendors. They have a lot of money coming through these accounts. So it's usually commercial accounts are getting hit far more often than just consumer accounts, but it could vary. It could be potentially big. So, one guiding factor that I'd be looking at if I were an insured looking to purchase coverage, and maybe think about, what do I usually have in this account, right? Like, how much is in there on a day-to-day basis? Other than that, I'm just the claims guy. So I'll let Kevin talk about what a good limit might look like.
But I think you nailed it, Ted. It's like, historically from community associations, we had commercial fidelity bond, employee dishonesty. The limit's always been 3 months assessments plus the reserves. So that was like the standard. So if you're looking at that's how much money is around, and you figure it out from the deposit forgery situation, if you keep all those limits the same, you're probably in pretty good shape. Because if you have a $250,000 employee dishonesty and then $100,000 everything else, the first question going to be, why did you have different limits? Why do you think that if you know the amount they have to lose is reserve account is $250,000 reserve account, you got to protect it. So you got to make sure you should have enough limits in there just in case the loss, at least the loss covers the amount of money you have on at any one time, which is 3 months assessment plus reserve. Again, that's a historical amount. So that's what I would say.
Great advice. Thank you. We have one more question that's come in from Pamela Rosanio. Thank you, Pamela. She would like to know, do we need to be sure that the property manager is included on all insuring agreements to avoid potential gaps as previously questioned?
I don't think you can cover the property manager with every single insuring agreement. I think employee dishonesty, it was historically the only one. I think social engineering, they are covered also. But I need to check on that one. We got to, but I don't think you can cover them on every single insuring agreement. I just don't see that as, I would say the best course of action is to make sure that the property manager has social engineering and has all the coverages. Because the key thing there, and Ted said it, is that it's going to be based on, is it a direct loss or indirect loss? And that's going to be the key. You want to add something else, Ted?
Yeah, I would also say, remember, most of the time we're adding the property manager not as an additional insured, right? Like, because we don't want to pick up all their money because they cover, because this property manager you're probably not the only association that he or she's working at. We're going to name them as an employee, right? And that employee definition is going to come in on different insuring agreements, the ones that Kevin just mentioned. So that's why you wouldn't necessarily see, for instance, there would be no intention to cover the property manager's checks, right? Instead, we want to cover, if the property manager is stealing from us, we essentially treat them like an employee. So the policy, if it's endorsed that way, has the option of treating them like an employee. But otherwise, make sure they've got sufficient insurance for their own errors and omissions.
Yeah. Mm-hmm.
Absolutely. Great. Well, fantastic. Well,
Is that
thank
it?
you so much. Yes, thank you for a fantastic webinar. Thank you, Ted, for being our guest today. And
Oh, you're welcome. My pleasure.
thank you, Kevin. And thank
We'll
you,
make
everybody,
this
for
an annual
joining
thing,
us.
and we'll be back every year to kind of give us an update on what's going on there. I thought this was really informative for all of us because we've all learned something new stuff today. Thanks.
Oh, that's great. Well, thanks. Always a pleasure. Thanks again for inviting me.
Yes, yes, great information, fantastic information. And thank you all for joining us. I did want to mention one more time that I record all of the webinars and put them on our website, which is kdisonline.com. So feel free to listen to today's webinar again and all of our past webinars. And if you'd like a copy of the PowerPoint that we showed today, please send me an email to sherry.branson@amwins.com. So thanks, everybody. Have a great afternoon.
Thanks a lot.
Take care.